want to extend a warm welcome and an appreciation from our team over at Golden Zone Trading to the Winvesting organization and MarketFest for having us in here. I want to thank everybody for sticking around to the end of the event. My hat goes off to everybody that's been here from the start of the event. It's always a pleasure to come in and speak with other traders and share our experience and knowledge with like-minded individuals. Before I get started, I just want to do a quick mic test and visual test. If you can hear my voice and you can see the screen, please type a Y in the chat box so that I know that I can get started. That way I know everybody's on the same page and we can carry on. Fantastic. First and foremost, I just want to make sure that I give you guys the link to our website. And the reason for doing so is at no cost to you. I'm going to put this in the chat box right now. You can sign up to attend our live trade room. If you want to come in and join us in the morning tomorrow, you can watch us trade the futures markets. We will be trading multiple assets, stock index futures, commodities, gold, treasury markets, and you'll be able to come in for free. You'll also be able to come in on a guest pass for that trade room, so we'd be more than happy to trade with you tomorrow if you do not have a community or if you do not have a place where you can help understand the markets with more professionalism. It's no cost to you guys, so just definitely go to our website, sign up on the main site right there, and that way you can get started with tomorrow trading with us in the program. The other thing I want to point out here, I'm going to give you guys a link to our YouTube channel, and the reason I'm doing this is because we film recaps of live application. We put videos on here that help break down how we actually trade. You will see us trade in these videos. You will see other traders that have made comments to the trades that they've taken alongside us in the room. So I encourage you guys to go to both of those links while you're joining us for today's webinar presentation, and that way you can subscribe to our YouTube channel and join us in the trade room. Okay. Now, what I'd like to do now is I'd like to just transition over to the presentation for today. What we're going to do is I'm just going to ask you guys a couple questions first. Before I start speaking and before I start going into any information, how many of you guys are day traders? I guess that's a good question to ask. And how many of you guys are swing traders? And if you could just be so kind to type whether you basically look at stocks, futures, Forex, options. I'd like to understand you guys so that I can basically cater the event to you. I think it's important for me to be able to address the greater part of the audience. We've got a lot of day traders in here, swing and day trading, swing trading, options, futures, stocks. So we got a pretty good mix. The benefit for you is that everything that I'm going to be doing here today caters to both swing trading, day trading, longer term trading. You can use our application and the resources that we're going to be discussing on any market, any time frame, and any trader type. So the information that I explain here has no bias. That way, any of you guys that have a specific category that you fit in, you can take something out of this. Okay. Now, another question here is, how many of you guys are familiar with the NinjaTrader platform? Can you guys type a Y in the chat box if you are using NinjaTrader, you're familiar with it, if you're aware of why I'm speaking of it? The reason I ask is because what we do is mainly on the NinjaTrader platform. The nice thing for you is if you're not using it, it's absolutely free if you're trading in a simulated account. So I'm going to be using our products and our examples on the NinjaTrader platform for today's webinar. Okay, so I'm going to be discussing basically our main bread and butter. We trade supply and demand order flow analysis using volume profile, and we do so in a very simplistic way, without a lot of clutter, without a lot of noise, very visualized trading. Myself as a trader, I'm a visual learner, I'm a visual educator, and I believe that most traders can learn best by seeing it done in front of them with a very clear view rather than having a lot of confusion. Most traders have a hard time making sense of how to make a rules-based decision. So hopefully after today you'll have more information on that. Now, I need to cover a quick industry-required disclaimer, as I am a trader and we are an educational company that does teach trading. Golden Zone Trading has no financial interest in the outcome of your trades. There is substantial risk of loss when trading securities, so you must determine your own risk tolerance and suitability to trade them. Our products and services are strictly for educational purposes only, so any of the market recommendations, any analysis, any trades that I demonstrate today or in our trade room or anything ongoing is not to be construed as investment advice. Last but not least, if you are placing risk capital in the markets, please do so at your own discretion, because past performance never guarantees future results. I know we've all seen that, but I need to cover that before we get started. The agenda for my discussion, I'm going to quickly cover a bio on myself, very short and sweet. I'm going to give you, some insight as to why you should even consider listening to me as a trader. There's a lot of information out there online and through a lot of events, but I think it's important if you're going to take anything out of what I say, I can show you some credibility and I can explain, what I do actively as an educator and as a trader. Then I'm going to transition over to helping you understand how we make order flow and volume analysis easy. It can be a very difficult process, but it's a very effective way to trade if you understand it and you know how to trade it. We're going to show you the main product that we use to analyze the markets, which basically helps us look at supply and demand order flow analysis, and then also looking at volume profile distributions within supply and demand analysis. I'm going to do a demonstration for both stocks, futures, and Forex using software that we trade with and basically helping you understand some of the markets. So depending on the time frames in the markets, you may see some of the examples that you're used to looking at. If at any time today you have not got a chance to see a market that you trade or on a time frame that you traded on, not to worry, because at the end of the event, I'm going to be giving you guys, like I said, a guest pass to our trade room, which you can sign up on our website, as well as a free trial to the software demonstrations that I'm using as an ongoing trader. So we're not going to be selling anything today. We're going to provide you guys with an offer to consider, but at the end of the day, you have the entire week to take a look at it, try it, because not everything that I discussed today might be relative to the way you trade. You might look at different time frames, different markets. So I'm going to show you how we look at it. I'm going to show you how it can be traded very easily and effectively, but you'll have the entire week to basically test drive everything that we're demonstrating here today. So no pressure, just sit back, very easygoing trading information and some education. Okay, guys? So my name is Sean Kozak. I'm the head trader and owner of Golden Zone Trading. I have a motto, and I'm very firm on this because there's a lot of noise in the industry, and I like to set myself apart from that. I'm not big on fluff, I'm not big on snake oil, and I'm not big on subjectivity. And the reason for this is because this is a business of risk. And if you're going to trade, it is a business. A lot of people take it as a hobby, which is understandably until they get burnt by losing a lot of money, or they understand that they need to make a shift for their trading if they're looking to succeed. And the markets is not a subjective place. It's a business of understanding. Education does not equate skill. So we like to be very objective when we teach, and the way we look at using software and the way we look at placing trades, managing them, and basically logging and tracking what we do. So if you have any questions, you want to speak to any of our traders, you want to look at statistics, you want to look at trading journals, you want to talk to anybody that's in our programs, we encourage that. We have a lot of traders that have given us permission to share their information with you, and we'd be more than happy to share that with you if you're interested in looking at what we do more seriously. Okay, now, I used to work in oil and gas, left that business and did a degree in finance. I wanted to change of pace, wasn't really happy with the lifestyle, made a lot of money in oil and gas, but it wasn't a life that I was looking to continue on. I hold industry licenses in Canada. I am a Canadian, and we are a Canadian-based company, which is equivalent to the Series 5 or the Series 7 in the US. And like most of us, I struggled drastically for the first couple of years of my career. And it wasn't because I didn't possess the skills necessary to trade, it's because I didn't understand what I was doing. Right? Most of us need to learn what to do before we can actually replicate that consistently. Now, I was fortunate because I invested in myself. I made a decision. I wanted to change the way I traded and the way I look at market analysis, and the way I essentially wanted to run a business so that I could actually live off trading and I can actually become a professional. So I seeked out professional mentors, and they were not cheap. I ended up being taught by former market makers that used to do institutional order flow on the Chicago Merc. I learned options and equities trading from a market maker that worked on the Chicago Board of Options Exchange. And then I actually had the privilege of working in a smaller private prop firm in Toronto, Canada, where I worked beside some very experienced traders. And it was then when I made a paradigm shift, because I was able to actually learn really essentially what I didn't know. And if any of you guys are in a place where you understand trading, you understand the knowledge, you know the terminology, you know how to look at charts, but you're not actually making money as a trader, there's nothing wrong with that. We just need to make an honest assessment of ourselves. Okay. Now, I've been trading successfully for just under a decade. It's one of the reasons why I have a very large following. I have a very active trade room. We're partnered with a lot of companies, development companies, automated software companies, and ultimately as the owner and one of the head developers, I work with a very experienced development team. I'm in the trenches with our software developers. We design the algos together. I design the frameworks, and then they code them. And it's nothing short of a miracle what we've been able to accomplish with regards to software application. And as an educator, one of the biggest payoffs for me is watching the light bulb go off with traders looking to become successful and then actually achieving that success. So I actually analyze trade logs with our students, and we look at their charts, and we really offer the feedback. And to me, that's the enjoyment. That's the enjoyment. We have a question here. What's my relationship with Shark Indicators? That's a great question. I was their Director of Business Development for 2 years. We built their ecosystem of partner relationships, so I've worked with all the partners that they're partnered with. So Jeremy and Zach, great team over there. They're actually one of our partners currently, so they're a great bunch of guys, and their Bloodhound software is very good. So that's a little bit about me. Just to kind of give a bit more credibility, I'm going to give you an overview. This is a trade log that I've kept since last year of the trade room. We have 2014 logs as well, but this is the most current log. And you'll notice that I'll just go all the way down to the last trade in the log. These are trades that I've taken in the trading room, in front of other traders. We filmed them, we've logged them. These are trades that I've taken during the morning session of the U.S. stock market open, right? So we're trading our trade room from 9 in the morning till noon, and any trade that I take in the trade room while educating, I log in this journal. Now, obviously, I trade outside the trade room, and we trade on days where we're not running the room, and you know, I'm also a trader just outside of education. But at the same time, these are trades that our traders have seen me take inside the room. And you'll notice today I actually took a small loss. I traded 2 trades, very whippy market in the morning off the news, but we log these trades. Okay, now this is an overall breakdown of the entire portfolio all the way back from, I don't know, February 2nd of last year. And I've taken close to 300 trades just in 3 hours a day, 2.5 hours each morning. Nice growth on the account, high winning percentage. Profit factor is very good. Reward ratio is very good from a day trading perspective, and we do this ongoing. We have a lot of students that are achieving these results, if not better. And this is just kind of a little bit of a credibility for my own trading, so you guys can understand why I'm here, and hopefully you can see what we're doing is effective. Okay, so, and if, like I said, if you guys want more information on this stuff, let me know, and I'd be more than happy to put you in touch with myself or other traders. Okay, so let's go in here and get right into this. There's hard ways to look at order flow and volume. How many guys or girls, men or women in here have ever looked at order flow or volume analysis before? Just type a Y in the chat box if you're familiar with it, you've looked at it. The main reason I ask that is because it's a very important concept to understand. The issue here is that most traders can't make sense of this type of analysis because it's very complicated to learn effectively. Most importantly, it's very hard to make a rules-based trading plan around something that is complicated to understand. Now, the reality is that it must be understood because the market is driven based off 2 factors: order flow analysis and volume. Order flow dictates the direction of price, and volume dictates the participation of price. And the way we look at it is we take this information that's very complicated and we extract that information and we make it very visual. And the reality is that this is almost impossible to learn, especially if you're a new trader. Most traders are pulling their hair out, can't make sense of it. We do things differently. We represent it through zoning analysis, and the reason for this is because we can remove all the clutter from the charts and we can identify where there's demand and supply in the market, but not only that, take it one level deeper. We're taking volume analysis and we're combining it with order flow imbalance, which is what supply and demand is created from. So whenever you have an order flow imbalance and the buyers start stepping in, that's where demand is formed. Whenever you have an order flow imbalance where the sellers step in, that's where supply is formed. But what we're more focused on is understanding the volume relationship at those key areas for trading opportunities. And I can almost assume that most people in here, and you can just validate what I'm saying, is type a Y in the chat box if you would think that looking at the charts on the right would be much easier to learn and understand than looking at the stuff I was showing you on the left. Let me know if you can agree with that statement. Because personally, I need to make things simplified as a trader, especially as an educator and especially as an active trader. So if we're going to teach a new trader or even an experienced trader that doesn't have the skill, We need to simplify it, strip all the stuff down, and make sense of why it's effective. You know, why should we trust this analysis? That's the biggest concept, right? Why would we, you know, we don't just pick a strategy and then just hope it's going to work, or use some indicator because we've seen it on a website, or, you know, what is really driving the algorithms? What is really driving the analysis? Okay, so this is something that I'm going to spend all the time on today and explain it. So the zoning software is what I trade with, and the reason I'm giving you an overview of the software is so you can understand why I'm going to demonstrate application when we look at the charts. Everything we do is leading. Now, there's a big you know, toss around of jargon in the industry. You know, you don't want to use lagging information. 95% of all indicators we use on a chart is lagging because we need price to happen in order for their data to plot on the chart. Moving averages, oscillators, momentum indicators, anything like that is lagging. Where zoning methodology is forecasting. We're able to forecast levels of importance based off imbalances and based off volume. So we're not actually waiting for the current price bar to plot or happen. We have the ability to forecast everything that we do so that you're planning your trades in advance. Why is this important? Because when we look at trading order flow, we don't want to have to be put into a place of reacting to the market. If you guys have ever found that you've been trading and all of a sudden all this stuff's happening and then you have to act instantly to make a decision, if not, you can't make sense of what you're doing. The way we look at it is we should never be put in that state if we're going to have a calm, easy approach to making our analysis more effective. So what we do is we become proactive traders, essentially. Now, we use order flow to locate supply and demand, but then we put volume profile transparency inside the order flow so that we combine the two most constant factors in the market, which is order flow and volume. And then what we do is our price bars have built-in driven algorithms that are based off volume. So we can use color-coded candles to identify when volume is stepping in, and we can actually get ready for a zone to print so that we have basically a step-by-step process to basically get ready, plan our awesome setups, and then start taking trades, okay? Now, the whole concept here is to visualize wholesale and retail places in the market. Trading is no different than any other business. If you were in the shoe business and you were selling shoes at wholesale, or you were basically looking to sell a lot of shoes, right? Let's say you bought a cargo container in China, you bought the shoes for $1 per item, you bring them back to your country of origin, you sell them for $5. That's a business model. Trading any financial instrument, whether it's stocks, futures, Forex, whether you're doing it on a day trading time frame or a swing trading time frame, it's the same principle. You need to locate where things are at value, so you can buy things when they're cheap, and you can locate when they're expensive so you can sell them. The biggest caveat here is most traders don't know how to identify that on a price chart. They don't know where value or retail is actually located with accuracy. And that's why we use the software, that's why we use this analysis, so that we can take the guessing out of what we're doing. Now, like I said, it's transversal to, it's basically dynamic. You can day trade, you can swing trade, anything you're looking at. And for those of you that have asked questions on Bloodhound, all of our software is compatible with our partner Bloodhound from Shark Indicators, because a lot of traders like to build their own strategies. They like to build automated or discretionary systems. Everything we do is compatible with Bloodhound, which is another add-on that we won't discuss today, okay? So the main question I have for you is, where do prices turn? We can have a bias, we can have an opinion of where we think the market's going to turn. Maybe it's going to turn on a Fibonacci. Maybe it's going to turn because it hit a trend line. Maybe it's going to turn because we're at the previous day's high or low. All of that is subjective. And as I said, we're not looking at being subjective. We need objective reasoning around what we would expect the market to do. So when the market gets to wholesale areas, okay, cheap areas, this is where demand order flow is greater than supply order flow. And when the market gets to retail levels, this is where supply is to be evident in the market. So we would expect sellers to step in. And you can see I've circled some examples of every time price came up to supply, we get a sell-off. Every time price came down to demand, we get a rally. And it's not because someone had an opinion on this. It's because this is where order flow imbalances are taking place. So this is where we should expect a turn in price. And the only reason price actually turns is when the market makers cannot distribute an equal pairing of order flow from the buy side of the market to the sell side of the market. And the truth is, we hear a lot about, well, we're competing against institutions, and we have to be on our game because we're competing against the big boys. I'm going to bring a hard truth into this, because the reality is there's no competition, guys. they are always going to win. We are never competing against them because there's no competition. We're not even on the same playing field. So if they're going to dictate where value and retail is in the market, we need to have analysis to be able to identify where they set that course for us. And that's what our software and that's what our methodology does. It allows us to look at where the bigger traders are setting those imbalances by that order flow. They're the ones creating those market turns. They're the ones that are creating the imbalance in buy side or sell side distribution. They're the ones that create the volume. So we need to identify where they're doing that so that we're not competing against them. We're just participating with them at the locations where they set the course for us to identify. Okay? Now, let's take this one level further. When we're looking at a price chart, whether you're using candle charts, or you're using custom bar types, time-based charts, volume, range, whatever it is, a price bar has 4 relationships. You've got a high, a low, an open, and a close. And the way we look at it is it's a 3-step process. Okay, I'm going to grab a cursor so we can explain this a little bit easier for you to see. The first step is identifying the black bars. The black bars is when our algorithm will detect there's an imbalance in buy or sell side distribution. This is where there's an order flow imbalance happening inside the order flow in the print and inside the algo. And this is where we actually take the footprint and the order flow imbalance stuff and we actually remove all that and we just put it inside the bars so you don't have to get confused about the information. And then what happens is after a black bar is print, you'll see there's a black bar here, there's some black bars here, there's some black here, there's some black bars here. Immediately after a black candle, this is when our volume detection kicks in and it starts to analyze the volume inside these bars. And basically what happens if we get a red bar that closes fluorescent, we will print an imbalance with volume at supply. Down here you'll see we have a black candle. As soon as the black candle closes, and then the next bar prints a fluorescent green candle, we will print a demand zone with volume distribution at the close of this bar. And then what happens, price comes back to tag demand, we get a reaction. Same thing with supply. If price came back up to hit supply, we would get a reaction. So the nice thing about what we do is that we're not reacting. We have ample time to plan what we're doing because we need a black candle to prove that there's an order flow imbalance, and then we need volume to step in and let the bigger traders prove that that imbalance is actually holding true. So we can expect there to actually be buyers or sellers at these levels of imbalance. And then we have the ability to qualify the volume within those levels. Let's talk about the volume. Okay, inside the zones, we look at volume profile transparency because we want to identify when we have the sellers stepping into the levels of imbalance, what is the volume telling us? Where is the bulk of the volume, right? We know that there's high points of volume, which is identified by the volume point of control, and what we have is we have a built-in cluster that tells us the most concentrated volume inside the imbalance. And then we also have the ability to look at that demand side as well. So for those of you that are new to volume profile, not to worry. The zoning software makes it easy to understand it because to me, I don't want to have to be drawing things and understanding where things are relevant. I want to trade and I want to be active, but I want to make it simple. So whenever we print demand or wherever we print supply and we're getting ready to sell supply or buy demand, we can look inside the volume and we can identify where we would expect price to react because price will act like a magnet to volume and it will reject from low volume nodes. So basically what will happen is it will reject out of areas where volume is not accepted and it will attract itself to where volume is accepted. And we just need to use the zones to tell us how to reduce our risk, okay? So I know I've covered a lot of information and it might be, a little bit overwhelming for a new trader, especially if you're new to supply and demand or if you're new to volume. What I'd like to do is I'd like to shift gears and I want to show you what this looks like on some charts so you can identify any of the markets that you look at. Now, what I'm going to do is I'm going to take a collective sum of the audience participation here. Can you guys tell me if you would, if you look at time-based charts, the markets that you trade, and what time frames you look at these markets on? Because what I'm going to do is I'm going to see if we have those charts loaded. We've got volume charts, 6 Renko, 5-minute ES. Okay, I have a 5-minute ES up here right now. We have tick charts, volume bars. Okay, perfect. So we got 5-15. So I've got a pretty good range of everything that you guys are looking at. So what I'm going to do is I'm going to demonstrate what we're doing so you can identify how this works. And you'll notice on the top left I've got the ES on the 5-minute. I've got a NASDAQ on a 244 tick chart. I've got a gold on a daily chart, so if you're swing trading the markets or if you're looking at bigger time frames, you can identify bigger time frames, and this is a gold market. I can add stocks in here if you want me to add a stock in here, Google or Apple or Amazon or anything you want me to do. I think I have a connection for data on that. We can do that. I've got Renko charts down here. We're looking at crude oil on a Renko chart. We've got the YM on a volume bar, and I've got the Euro USD on no gap range bars. Okay, so the whole concept here, what I'll do is I'll just pull a volume chart up here for a second. Make it easy because every chart is the same. I'm going to show you how we use the software to identify things, and then essentially what we're doing is we can manipulate what we want to see. So we can pull levels from higher time frames. So let's say you're trading on a smaller time frame chart and you want to pull levels from a bigger time frame. You can pull levels on a higher time frame chart. We have the ability to look at market structure within the indicator. So the indicator has the ability to look at market structure. So if you look at, trending analysis or swing point analysis, you can put that on so you can calculate the areas. We've also built in a grid system so you can basically identify where value and retail is based off market structure and order flow. So to me, the concept of understanding order flow is I want to be buying demand at value, which we are, and I want to be selling supply at retail. Take a look at this. This supply zone was created at the close of this bar. And we can turn a grid system on here so that we can see if we're going to sell the market in supply, it makes sense to sell it at retail price levels. So let me turn this off for a second and show you an example. The way we look at using order flow imbalance is we would look at using the zones to cap our risk. So we would place our orders at the edge of supply with our stop loss directly above it, because if the level breaks, that's the lowest point of risk. We don't want to take risk and increase it. We want to cap our risk so that we can look at money management, and I'll talk about that in a second. Okay, so you can see here if price comes into the zone, okay, price touched the zone to the tick, and there's no surprise to that why price reacts to the zones to the tick. It's because it's being pegged off of volume. These zones are created based off volume and order flow, and what happens is it comes up to retest it and then it basically drops. And the reason it drops in here is because this is where the sellers are proving itself. They're proving that there's a strong imbalance in order flow, and we want to be selling where the origin of the move starts. We don't want to be selling after the move is done. Okay? Now you'll notice here that we're in value currently. Let me just pull up the grid here so you can see it. And if we're going to be buying demand, we want to be buying demand at the origin of the move. If you see here, we've got volume profile in the level, and you'll notice how the point of control is sitting right at the edge of the zone, but you see there's this black outline. Well, that's the most concentration of volume. So basically what's happened is prices come down to tag high volume. And a lot of our traders, what they do is they reduce their risk by entering in the zone by using the volume to tell us where they want to get into the trade, right? And basically what happens is they place their orders inside the zone so that we can actually place our stop loss below the zone and we can cap our risk. Now we have the ability to look above us, because if we're buying in demand, the way we would look to trade this, we would look to sell the market and get out of the trade at supply, at retail price levels. It makes sense to do that, and you can see the risk reward is quite favorable on this position. Okay. Now this is just an example. I'm going to show you an actual trade setup. We're going to actually take a trade in Market Replay. I'm going to walk you through the anatomy of a trade. I just want to go through and show you some other features. One of the biggest features that I use on an active basis is money management. And the way we look at this is to make it very simple for traders. We have an algorithm built into the software that can tell you the average stop loss for every single zone, whatever market that you're trading. So if you're trading the volume chart of the YM, the average stop loss, if you're entering at the first touch of the zone, okay, is about 19 ticks. If you're entering at the point of control within the zone, it's about 14 ticks. So you can see how just identifying using the zone volume can help you identify the size of stops that you're trading with. If you're entering at the value areas or the volume cluster, you can see the point of control is very similar to the volume cluster. That's why, because most of the times the point of control is within the volume cluster. And this is really important because if you're trading a market and the average stop loss is too big for your account size, then you shouldn't be trading the market on that time frame. Okay, and this can be used for position sizing, money management, and it's all built in. So you really don't need any other software or analysis to help you identify risk management and proper planning. If we take a look over here at crude oil on a Renko chart, Okay, I'm going to go back this morning. We can go back and we can look at all the historical zones that we've actually had trading opportunities today. Okay, and you can see here that price reacts pretty heavily off these levels. Price came into demand. Take a look at the volume coming in off the open here. I'm going to remove this zone. Let's do this here for a second. I'm going to move this, delete it, move it down just a little bit so I can just demonstrate a concept. Okay, you can see here we get a custom bar type. This is a Renko chart, crude oil, right? Two black bars. At the close of this green candle, this zone plots, and if we take a look in here, price reacted up before coming back. You have ample time to start planning your entry inside of demand, and the zone allows us to cap our risk because we can place our entry, okay, our entry at the zone. Our stop loss goes below the zone, and take a look. We don't have any supply on our chart until up here at 35.20. So if the market really primes itself, we have a lot of room for movement. It comes up, comes down, and it comes into the zone. Guess where it comes to? Inside the zone, guys. It comes to the point of control inside that zone. That yellow line is the point of control. That's the highest place of volume. What happens? Comes deeper in to test the volume cluster. It is awesome. It is really awesome. And take a look what happens. Comes almost to supply, guys. Okay, almost to supply. Now that's a trade that took place this morning, you know, pre-inventory. Okay, pre-inventory. Now after inventories came out this morning, and I'm going to talk about why which zone would fail. You can see the volume is very limited in this zone, where the volume is very strong in this zone. We can use a qualifier. Watch what happens. Let's go to profile features and let's turn volume values on. We have the ability to take a look and compare. No, it's just one. We've got a question. Is there anything? Basically, they've got a question here saying, is there anything unique about the Logic Ultimate Renko? No, these are just a bar type that is basically programmed from one of our programmers, Pure Logic Trading. We find them to be very reactive to our software. That's why we like to demonstrate stuff that we know works exceptionally well. But let me kind of explain what I'm talking about here. You can use, you know, other Renko charts and stuff like that, but we just need to make sure that they're wicked Renkos. If they're not wicked Renkos, they will not work with our order flow analysis. Let me kind of look here. We've got average volume calculators built into the software. And the reason I look at this is because when I'm looking to trade a demand zone or a supply zone, I want to qualify the volume against the average. If you take a look at this demand zone down here, okay, take a look at the point of control volume, and I'm going to just draw an arrow to show you where I'm looking at right now. Take a look at the volume in this level. The point of control, the value area, and the volume cluster. If you want to really identify strength of a level, take a look at the average volume for every zone. The average volume is only 736 contracts per demand zone or per supply zone, but the point of control volume and the level that held very nicely at this morning is almost, you know, 2.5 times that amount. We can see that volume is accepted here with a lot of participation. You can take a look at the volume up here, 100 contracts. See how this volume down here is very low? So we would look to avoid levels that have less volume because there's not a lot of acceptance at those areas. So it's a good qualifier to help you stay out of trades. Okay? Take a look what happened here. Reacted again off this high volume level. And then we got the inventory report. Now the inventory report came down pretty heavy, but take a look. After the report, supply was created, came into the supply. Let me just turn everything off here to make it easier to see. The zone was created at the close of this bar, and then it came down. You have ample time to place an order at supply proactively and basically look at where you want to take that trade. Now, I would look at reducing risk just below the cluster. Why? Because it allows me to cut my risk down a bit, and I would place my entry here. That's my risk on the trade. My stop loss goes above the zone, and I would look at where I'm looking to take an exit. My entries here and my stop loss, my target would be down at demand, because take a look, that's where demand was previously at. There's a lot of volume down here at this level. We can extend that volume. We can see what happens. Take a look at this. Look at the point of control in the volume. I would expect price to come down to high volume. Comes down, reacts, comes down to volume. Blows through it. Great trade though. Okay. Now this is just on a Renko chart, and the reason I'm showing examples on different bar types is because a lot of traders don't trade the way I look at the market. They don't trade differently. Of course it can, Nick. It can be automated with SI Raven because we built our software compatible with Bloodhound. Absolutely. Let me take a look at gold on a daily chart. Okay, you can see here clearly the move is primed to the short side. You would not want to be buying a sell-off like this. At the close of this daily candle, okay, at the close of this daily candle, I'm going to expand this a little bit. This zone is printed. So we have ample time to look above and say, okay, that's a major area of supply. And if we're going to look to plan that, I'm going to just put broken zones so you can see previous levels. Okay, we didn't even have demand yet down below us here. Okay, so as price reacts, it forms demand, and I'm going to move this zone out of here. It comes up to supply. And guess where it comes up to? I'm going to move this. It's hard to see that. There's a little green line in here. Guess where that is? That's the low value area inside the zone. To the tick, mind you, it's very reactive. Okay, it's very responsive. So when we see this, comes up to the tick, comes back down to demand. Does everybody see that? The reason I'm talking about this is because it's not a subjective concept to understand why price reacts at specific levels. Price needs to go to volume and it needs to be rejected from order flow imbalance. That's why the price reacts in here. Comes into demand, stalls out, breaks down, forms levels of supply. Okay, this is on a daily chart. Take a look at how price has been in this big range inside of gold for a while. Let's take a look at a time-based chart on the ES. I'm going to put broken levels on here because once a zone is broken and it's no longer valid to trade, this is today off the open. Okay, we can see here that we had a level of demand form off the open. This is a level of demand right here. We also had a level of demand form right here. Now this level of demand, okay, absolutely, David, we can provide that recording for you, no problem, later on once it's available. This level of demand, and I'm going to turn supply off for a second. It formed at the close of this candle at this green thrust bar at 1990. So we had ample time to plan along here off today's open. 1030 came in here. So you can see that at the close of that thrust candle, which is a volume-driven bar, this demand zone prints. We plan our entry at high volume. A couple ticks below the zone is where your stop loss goes. And let me put supply back on the chart so you can see it. At the close of this bar, that supply zone prints. For me, I'm going to look to go long right here, and I'm going to look to plan my exit at supply. Price comes into demand, holds in demand, comes up to supply. This would be where T1 is located. Okay. Yeah, that's a good question, Wouter. The reason I'm demonstrating on different markets is because not everybody trades the same bar types we do. And so we need to make it dynamic for everybody that's looking at trading their analysis. The software works on any bar type, any time frame that you can imagine it. It's just a matter of your stop sizes, right? So if you're a trader that's trying to trade the ES and you can't handle a 12-tick stop, then basically you wouldn't trade this time frame because this is too big of a stop size for you. Maybe you'll drop down to a 3-minute on the ES. And basically you have the ability, okay, you have the ability to look at this time frame, okay, using a different time frame. So this is basically why we can adjust, and if you take a look at the stop sizes in here, 10 ticks. So we've now dropped our stop sizes off the zone by 2 ticks per zone. So if you're able to handle a 10-tick stop, then you could trade the ES on a 3-minute using the zone methodology. Okay? So you have complete flexibility to identify whatever market you're looking to trade and whatever time frame you're looking to trade. There's no bearing on that. So as long as you can identify what you're doing with whatever time frame you're trading. How about a 30-minute bond? Are you looking at ETFs? Are you looking at Treasury, ZB, ZN, Aubrey? I could pull a bond market up here. You're looking at the ZB, the ZN. I'm assuming you mean futures. ZB. Okay, let's do that. Let's turn this over to ZB. Let's pull that up. Let's change the fractal. I'm going to turn the zones, broken zones off so it's easier to see. Okay, and let's just turn this to a 30-minute chart. I'm going to increase the look back period so that we can get the days to show. I'm going to go into 50 bars, 50 days, okay? And then what we'll do is we'll take a look at this. It's a 30-minute chart of the bond market, okay? And I'm going to basically put on broken levels so you can see past areas of influence. And you can see here today there's very low volume in this demand zone. It's been very choppy today, okay? Very, very range bound. Identifying that directional bias is very important. Now, it's important to also identify directional bias because the main question we haven't answered is how do I trade it? I've showed you that the levels hold. I've showed you that you can be using on other time frames and you can essentially, cater it to, any type of trader in here, but I haven't really showed you the strategy. I haven't really showed you, how, Sean, can I make money trading with this? How can I actually, make a business out of trading, either day trading or swing trading? That's the key question. I'm going to spend the rest of the presentation doing that. I'm going to show you a very simple rules-based trading plan, and ultimately it's just combining directional bias with the zones. Okay, you can trade a range with the zones very effectively, but you have to identify your condition. Okay, and you have to identify, which market you're looking to trade. Now we hit supply up here, we're getting a reaction, but the bonds were very whipsaw today. We were looking at them in the trade room, not very favorable market today to trade this. Okay. Let me kind of explain another aspect of this. You're going to have zones everywhere because there's always order flow imbalance on every market on any time frame at any given time. There's always buy side and sell side, and there's always volume. The question becomes, how do I know which demand zone to buy and how do I know which supply zone to sell? Okay, that's the key criteria, and we need to discuss that right now. Okay, so what I'm going to do is I'm going to close this workspace. Okay, I'm going to close this workspace. I can open it up again if we want to look at other markets. Okay, and essentially what I'm going to do is I'm going to disconnect from live data. And the reason I'm going to do this is because I'm going to show you a trading plan. And I'm going to show you a trading plan using a range chart because I trade on range bars. I'm confident and very, very used to range bars. But I need to load market replay data so I can demonstrate a proof of concept with you guys from a trade that actually took place this morning, pre-market on the NASDAQ. I could have chosen crude oil, I could have chosen the bonds, I could have chosen anything, I could have picked any time frame. I'm just going to use a fractal that responds well on the NASDAQ, and I'm going to explain the concept of this, okay? So I'm going to basically connect to market replay, and I'm going to demonstrate how to trade like this, because this is the key feature. This is really, Sean, show me how to trade this way. That's the key concept, right? So I'm going to load market replay data. Just give me 1 second here while I do that. And I need to go into 9 a.m. Give me 1 second, traders. I'm just going to load the data. I believe it's 9 a.m. Yep, 9 a.m. Let's do this. And we're going to go back to December. Just need to load a little bit of data. And we'll get it up here in no time. Okay, because this is an example that happened today. It's current. Okay. Now, before I go into showing you how to trade this way, guys, and this is the same on any market. So what I'm going to show you, yes, it does. Yeah, it does. And if you have to leave, make sure that you send us an email because we're offering a free trial of it at the end of the event. So if you're not able to stick around to the end of the event, send us an email. You can go to our website, and RJ, you can maybe send us our email, and we can put our email in the chat box, and that way you can contact us. Not a problem. Okay, guys, so let me just explain this for a second. I'm going to pull up a trade plan, which is what most traders don't have, and I'm going to pull one up here so we can talk about this for a second. Okay, can everybody see this? I'm going to expand this a little bit. Okay, everybody see this? Excellent. whenever we run our trading room or whenever I teach traders, the reason we have a high success rate of winning students and the reason why I'm able to effectively run a trade room and actually trade in the room with everybody every single day is because we don't deviate from a plan. And this plan can be done for day trading, swing trading, larger term trading, and the reality is it doesn't need to change because it works really, really well. And if you're looking to simplify what you're doing and you just need to trust in a process, I would encourage you to take a screenshot of our charts right now. This trade plan, if you just take a screenshot of the top of your corner of your browser or your button there should be a little screen capture. You can take a screen capture of this. The first one is we need to identify directional bias. Normally this is done by two things, either price action or using a read of momentum or an oscillator that's telling you whether to be bullish or bearish. I use an oscillator that we provide inside of our programs, and basically the way I look at this is I like to simplify it. If the oscillator is bullish, I'm looking for longs. If the oscillator is bearish, I'm looking for shorts. And essentially, it's very simple to do. So step one for what I'm going to show you, okay, let me just move this up for a second. I've got an oscillator down here. This is our velocity Momo divergence indicator. You can find more resources on our website about this, but you can use anything. You could use a MACD. You could use an ADX, you could use a balance of power, whatever it is you're looking for to trade with, you just need to determine what is your directional bias. For this example, when the oscillator histogram is green, I'm going to look to buy demand zones. When the oscillator histogram is red, I'm going to look to sell supply zones. Why? Because I want to trade in the direction of the market. I want to be buying demand with momentum, and I want to be buying demand with the market. I don't want to be counter trend trading because it's much harder to make money that way, especially as a newer trader. Okay, so step one is if the momentum histogram is green, I'm going to look to buy demand. If it's red, I'm going to look to sell supply. Okay, does everybody understand step one? I just want to make sure everybody understands that before I go any further. Okay, excellent. Step two is we need to identify the demand zone in which we're looking to trade. Okay, so step two would be, if I know I'm looking to buy demand because of my directional bias in step one, I need to identify where that demand zone is. Okay. Yes, we can use it for Forex. We can use it on any Forex. And the reason for this is we've spent a lot of money and a lot of time building in tick level volume detection because Forex, especially intraday, doesn't give you bid-ask volume. So we use uptick, downtick distribution, which is over 90% correlated to bid-ask. And I know that because I work with our development team to design it. Yeah, so if you're a Forex trader, this can work for you exceptionally well. All right, so let me just carry on, guys. Step two is we need to identify a demand zone, okay, to buy so that we can plan in advance where we're participating. Okay, so for this example, okay, if we take a look here, we have positive momentum, so there's no reason we want to sell supply zones at all. And if we're buying demand, where is the next demand zone? If we're trading on this price bar, this is this morning, we're going to buy this demand zone. Why? Because that's the next demand zone closest to current price. That's the next area where the bigger traders have told us there's a demand imbalance, and we can see the volume in there. So long bias, there's the demand in which I want to participate with. Okay. So step three is where we get our hands dirty. Step three is essentially, how do I plan my trade? Is this a good trade for me to take? Is there high probability for this trade? Because yes, I have directional bias. Yes, I know there's a zone to trade. Does this trade actually meet my trading plan? Well, what we're going to do is we're going to look at reward to risk. That will help dictate your position sizing based off whatever account size you're trading. And then you're going to look at planning your entry and your exit before you ever get into the trade. Now, if you're not currently trading this way and you're struggling, that's probably one of the reasons why, is because a lot of times you're not knowing what you're doing in advance before you participate. So what I'm going to do is I'm going to help you plan this trade. Okay. Another thing that I've done is I've added a qualifier on the chart. You can see that there's a grid system in here. This is an automatic grid system. You can turn on or off, and this just adds probability to your trade. If you're looking at buying demand, we want to be buying demand when the market's at value. Okay. We don't want to be buying demand when the market's at retail. We want to buy the market when things are cheap, okay, especially in demand. So that's just an added bonus for this trade, okay? So right now, let's plan the anatomy of this trade so we can complete step three of the plan. If price comes down, and I'm going to turn the data on so it will, I want to get long this demand zone, okay? And I'm going to look to do so inside this zone. Now, the best place of entry for me would be just above this big black area, because that's where I can qualify the risk and I can cut my risk down a couple ticks. You can enter at the first touch, there's not a problem with that. And if you look at the stop size calculators, the average stop size is about 15 ticks if you enter at the first touch of the zone. But if you enter at the point of control, it's about 10 ticks. If you enter at the volume cluster, it's close to 12. So let's do in the middle here, let's do this. That's my entry. My stop loss always goes a couple ticks below the zone. So that's my risk on the trade. Now, depending on what size account you're trading, you'll be able to plan your money management, because you can plug these values into a position sizing template, and you can calculate how many contracts or how many shares or anything you want to trade. Now, if I'm going to basically be buying this demand zone, don't I want to identify supply? So if I'm long the market, I want to know where I'm taking an exit. Well, currently, this is the only supply zone that's here, okay? And it's come up to volume, okay? So this is where I'm looking to buy, and this would be where I'm looking to take my exit. Now, what I'm going to do is I'm going to turn an ATM strategy on here, okay? Turn an ATM strategy on here so that I can plan the trade as the market comes down to this location, okay? So let's do that. Let's put an order in here. This is in a sim account because we're demonstrating on market replay, okay? Put my order right there. Going to speed the market up just a little bit so we can demonstrate proof of concept. And then what we'll do is we'll pause it and I'll walk you through how to trade like this. So if the market comes down to demand at value, okay, I want to buy demand, okay? And if you want to be a little bit more aggressive, you can put the order right at the edge of the zone. It increases your risk a little bit, but it also decreases your reward slightly, okay? Let's see if I get filled here. Let me pause it, okay? I'm in this trade. Now let me kind of explain something here. Now I had that turned to 30 times market speed, so it moved very quickly. So during live markets, you're gonna have a lot more time to do all that. Now you'll notice here I have an ATM strategy. My stop loss normally goes 1, 2 ticks, sometimes 3 ticks below the zone. And we can adjust, and I wanna see where the market's expected to react. Well, you'll notice how price came up into supply right here, and it reacted. So the order flow has been used up all the way to this price point. You can see there's a white line here. We have a marker that's built into the software that will allow you to see where the zone has been traded into, so you can identify where the order flow held inside the level. Because there's a reason why price came up here and it stopped. It's because at that price level, at 44.01, the sell imbalance was greater than the buy imbalance. So the market turned from there. There's a reason for that. It came into the high volume areas. Take a look. It's 2 ticks below the volume cluster. You guys see that? So if I'm going to plan an exit, my risk and my reward needs to be favorable. So there's my risk, and my reward, at least to the zone, is greater than a 1-to-1. If you hold it up here to this volume area, okay, it's much greater than a 1-to-1. It's almost 2-to-1, okay? So this is very good to identify from a reward to risk standpoint. I'm going to speed this up a little bit, and let me do this for a second. Let's talk about this. Managing the trade. Well, essentially, we have 2 things to do. We have to manage the trade. We also have to manage our expectations. If the market's in a trending environment and we are in a situation where the market is giving a strong confluence, a lot of momentum, a lot of follow-through, then we could expect to basically, we can expect to have a trailing stop. If the market's in an oscillating condition, we're not going to look to manage a runner. We need to manage our expectation on that. And that goes true for any day trading or swing trading or investing strategy. We need to invent the expectation that's healthy for us. Okay, now we're also going to manage the trade so that we can protect the risk once we've taken profit at the right location. And then what I always tell the traders to do is journal the trades. And as you can see, when you journal the trades, you can follow a process so you can analyze your stats, okay? You can't analyze your winning rates and your stats if you don't journal the trades, okay? So this would be where you would look to journal the trade at the end of this trade. And then after you've ended the trade and you've journaled it, you just go back to step 1 and you identify the next trade, because it's that easy. It's a very simple trading plan. It's a very rules-based structure, Now this trade took place this morning, okay, and watch what happens. Okay, pause it. It moves up. This ATM strategy moved a little bit soon. Normally I'd like to keep it down here so that I'm not cutting my risk too quickly because it's used for a different approach, but let me just show you an example here. As soon as price comes closer to my target, this would be where I would look to manage my position. Normally after 1-to-1 or 1.5-to-1, I'm going to manage the trade, okay? And it should react off supply in here because we're getting close up to retail price levels. Okay, we're getting up close to retail price levels, and we're getting near supply. Okay, so as we approach supply, this is where we'd be looking to cut the risk off. And good question, Steve. We would never enter this trade again. We would never enter this zone again because we do not teach how to trade tested order flow. The order flow in this zone has been used up. That's this reaction. That's where that order flow imbalance came. So I would look to see a fresh level of demand or supply with directional bias, and this would be where you would look to not take a trade in this level again. Now the way I teach trailing stops is I use price action because if the market gives me a runner, I'm going to squeeze the entire leg out of that move if possible. If the market doesn't give me a runner, then I'm going to still squeeze as much out of the move as possible. I'm going to use price action to squeeze my stop. Now take a look here. We're getting a bit of divergence, okay? Take a look at the reaction here. I squeeze my stop. Okay, I squeeze my stop and I trail range. Okay, I use my stop loss to follow the lows of the bar, and I usually go 2 to 3 bars back. Okay, and if I'm looking to squeeze the leg, I'll trail price by the first bar. Okay. Now you can see here we took profit at the first target, and we can trail my runner. This is a trade that happened this morning. Okay, this is a trade that happened this morning in demand on the 12 tick. Earlier trade you're talking about down here, Steve, this zone down here. Yeah, but it's never been traded into. We've never touched it, so that's still fresh order flow. So if price came down here, and as long as I had a long bias, okay, I would look to take that trade. Okay, now the entry is very clear. The exit's very clear based off rules-based structure. Let me put broken zones on here for a second because you could have planned another exit up here at the other supply zone. Okay, you could have planned another exit up here at supply, but if you're only taking first target and managing a trailing stop, then you would not look to exit there. You would just look to exit based off your trailing stop. But the same rules hold true based off of everything that we teach. So you can use that on any type of trading style. I don't want to make things subjective, but that's how I manage trades. I trail the runner based off range, and I use price action. So I can squeeze the whole leg so that I don't leave money on the table, because there's nothing worse on having a trailing stop using an indicator that puts your stop way down here and you're trading way up here. Because if the market doesn't give you any further move, then you give back so much of your profit. And to me, it's not about that, because trailing stops are not expected to work maybe 1 in 5 trades, maybe 1 in 6 trades, catch a big runner. So with that in fact, why give that back? Okay. Does everybody understand that? Was that a clear enough example to help you understand? First, you want to pick directional bias. You can use an indicator, you can use price to determine trend or momentum. And you want to look for a demand zone or a supply zone in the direction. Okay. Then what you do is you plan the anatomy of the trade after locating a zone to take an entry. You can use volume inside the zones to basically locate lower risk place of entry. You can use volume to cut your risk down. Yes, you are, Bill. Now, there's 2 RJs. RJ is Raul. He is my senior support specialist. There's another RJ that runs broken zone is zones that are no longer valid. They've been traded through and the order flow has been consumed. And then once you've planned the trade and you execute the trade, then you manage yourself and you manage the trade, journal it, and repeat the process. Okay? So let me just kind of, give you terminology here. Let me just clean some of this off so that I don't take too much of the time. I believe, Dan, I was given all the way till 4:30, and which is going to give me enough time to close out the event. Okay. IceWiz is saying, what is supply and demand? Demand is where there is buyers in the market. Supply is where there's sellers in the market. This is not support or resistance. They're very, very different. Support and resistance based off market structure. Demand and supply is based off order flow and volume. Very different. So an example of a broken zone, these are broken zones because they've been traded through, they're no longer valid. You can go into the software and you can turn them off. Tested order flow is where you can see the zone is a different color. That means we've traded into a zone and we've used up order flow. It's no longer tradable to us. There's a lot of traders that will trade them, but that adds too much risk for us. The other aspect is a fresh level. Fresh levels are what we trade. So if price came back down to this demand zone and I still had a long bias with trend or momentum, I would buy that demand zone. Okay? Does that make sense, traders? Okay, does everybody understand that? Excellent. Okay. So what I'm going to do now, okay, is I'm going to pull up a landing page. I'm going to give you a link in the chat box. Please type a Y and let me know that you can see it. I need everybody to confirm that they can see it. I don't want anybody to miss out on this. Okay, there's a lot of traders in here, so I want to make sure that everybody can get it. I want you to click on that link right now, and I want you to go to this page with me. Okay? Click on the link and go to this page. I'm putting in my personal information here. It's public knowledge on our site, so it's not for me to hide. This is our emails and our phone numbers and stuff like that. Okay? And when you load this page, let me know that everybody's loaded the page. Okay? I want you to put your first name, your last name, your email, and your phone number in here, and I want you to hit download now. And the reason for this is we're going to give you the software for free to use for the rest of the week until Saturday. Yes, we do, David. Just email us. We'll give it to you. Okay? So I want you to let you know that we're going to give you the software to trial because maybe something, what if you're at work and not at home and you can't download this now? Not a problem. Send us an email. We will work with you. We're a very large organization, and we can easily work within our ability to help you. Okay? And okay, and if you're on a Mac, Carol, not a problem. Just email us. I'll get RJ, my senior support specialist, to speak with you personally. We have best practices for that. Okay, so let me just go along here for a second. It's very easy to run this. Okay, just to clarify, this software is designed for NinjaTrader. So if you're not currently using NinjaTrader, okay, I would encourage you to go, okay, to our website. Let me just show you this for a second. Go to our website because it's free. Click on NinjaTrader or go to their website, go to ninjatrader.com, and just download NinjaTrader. It's free. You have no risk to you. Okay, they'll give you free data and they'll give you their free platform so you can test drive it and you can see what you're doing. Okay, the reason we're designed for Ninja is because the software that we use is very advanced. The algorithms cannot be written on other platforms because the other platforms are too archaic. So not that you can't trade through them, it's just that if you're looking to use analysis as effective as what we do, you need to have a platform that can be stable enough to run the software on it. And so you can actually trade effectively like that. Okay. Now, the installation instructions are very simple. If you have NinjaTrader installed on your computer, you want to close it, click the software installer right here, follow the installation instructions, restart NinjaTrader, and then you can use the indicator. Now the cool thing is that we're giving you this information as if you've already purchased the software because this is information that we provide to users who own the software. So we provide a full user manual. We provide an installation usage and settings video where I've spent half an hour going through the user manual with you so you can understand it. Okay? This is as if you've already purchased it, and we're going to give it to you for free so you can test drive it. Why am I doing this? Is because we don't expect you to purchase something that you do not think is right for you. And if you're going to trade using software and you're going to trade with us, the cool thing is that you can download the software and you can log into our website and you can join us in our trading room for free, and you'll have the software on your computer. Now, there's going to be stuff we're doing in our trading room that may be over and above what we've talked about here. It's because we're using other products and we have an advanced system and we teach a methodology, but the reality is that you may trade the software differently based off the time frames and the charts and the markets that you're trading. You may trade stocks, futures, Forex, and we're only looking at futures. Not a problem, but you can still be in our room. You'll still hear me speak. You'll still hear me talk about the markets. Our support team can be there to help answer questions. But we want to make sure that you can access that free trial. Okay? So run the installer. If you have any questions, please feel free to email us. And let me pull up the slides so that we can discuss how to conclude the presentation. Okay? We normally retail our software for two computers. We normally offer the software on two computers, and it normally retails for $1,500. It's the most advanced order flow and supply and demand software in the world to date on any platform. I know this because we have the best programmers, and we know every other software vendor that provides supply and demand analysis. Okay? And not that they're not great people and they don't have good analysis, it's just we know what we do is superior to others, okay? And the reality is that because it's a MarketFest event, we don't like to discount our software unless it's absolutely necessary. It's the best out there. So if you're going to trade with us and we give you free access to our trade room, you do not have to pay for our trade room, then essentially you can take a test drive. And because it's a MarketFest event, what I've done is we've discounted $400 off the software. And the cool thing is you don't have to buy it. So if you like it, you have a 3-day trial. The software will be good. The software will be good until Saturday. So you have the rest of this week. You can toy around this evening on your charts. You can join us in live markets tomorrow. You'll have access to use on Friday and Saturday. And you will get basically a discount on the software. Now, if you're ready to purchase the software at any given time during that time period, the trial and the discount for the MarketFest event is ending on Saturday. So you will no longer be able to take advantage of $400 off the software unless you purchase up until January 9th. Does everybody understand that? And make sure you write this coupon code down, because when you go to our website, absolutely, the zoning software is the one and only product you can trade hands down by itself. The only thing I would encourage you, Marabella, is make sure that you use directional bias filters. So if you have a trend decision, if you're using lower lows or higher highs for trend, or if you're using momentum, you always want to be trading in the direction of the market. Unless you're really good at trading ranges and you can identify that, but that's a little bit more advanced. I would really encourage you to trade fresh levels by itself with the direction of the market. Okay? Now, does everybody have the coupon code? Please type a Y in the chat box. Take a screenshot of this image right now. I need to make sure that you have it so that there's no confusion on this. The coupon code, it says right here, SDVGZT. Okay? The reason I'm showing you this is because at any given time while we're offering this promotion for the MarketFest event, if you go to our software tab on our homepage, okay? If you go to the software tab on our homepage, goldenzonetrading.com software, and you go to the buy now, or you go to the zoning software page, the SD volume zones, there's other videos that are going to break down an overview of it. There's also an all markets chart types video where you can actually watch it. And if you go down here and you hit buy now, okay, on our page, on our website, it's going to say $14.95. You need to enter the coupon code in here, okay, to apply the coupon so that you can get, okay, $400 off the software. Okay, we'll put it back up here in just a moment. I just want to let you know that that's how the process works. Okay, so there's the coupon. Our website is goldenzonetrading.com, and this offer is good until Saturday, but I encourage you to trade with us tomorrow because, you know, we might trade some of the markets you trade, and you might like what we do. You can get the free trial by using the link in the chat box. Let me just go back and basically, does everybody have this? Take a screenshot of that. If not, we'll send you an email, or you can email us at goldenzonetrading.com. You can send us support. And yes, we're recording this as well, Wouter, so we'll have a recording of that as well. Okay. So let me give you the link to the free trial one last time, because once you have this link, you can take advantage of it. And at any time, if you missed something or you have questions or you didn't get a chance to register for our trading room, you just go to our main website. Okay. You can sign up here, okay? And you can sign up for the free trial by using that. Yes, you can. You can use the SD volume zone software with Bloodhound to backtest a strategy. Absolutely. You can. You can most definitely do that. Yep, our software is fully compatible, and when you purchase the software, we'll give you a Bloodhound integration guide that will give you the data series and how to map it, plus we'll give you Bloodhound templates. We have Bloodhound templates that that we do that. Okay, let me just put our website up here so you guys have access to it. Excuse me, guys, I had to mute the mic there. I was clearing my throat. So let me just kind of explain here. We got a bunch of questions. That pretty much wraps it up for me, Dan. If you don't mind, I'm going to spend a couple minutes with some last-minute questions, if that's okay with you. Hopefully it doesn't go too much over. Yeah, you just click run and save it, Jeff. Just click run and save it. Okay. Let me just do this here. Let me just go through the questions. I just want to just go through here and let me see. So Ida's asking, does the price include some trade room time? Yes. You know, one of the benefits of what we do from a company is that anybody that owns our software will give you extended access to our trade room. So we don't charge a subscription. Okay, we don't charge a subscription to our trading room. So we'll give you free access to our trade room. That way you can take advantage of that. How can we join you tomorrow? Aniko's asking. Just go to our website, Aniko, and just log on to the main site. You just sign up on the main homepage. You'll get an opportunity to join the link. Can I use the software with Bloodhound? I've already answered that. Yes. How much does your trade room cost on an ongoing basis? We don't charge for our trade room. In order to get lifetime access to it, you will need to be a mastery student. But if you own our indicators, we give you an extended guest pass for a much longer period of time. So you can stay with us for several weeks, if not a couple of months in there. You won't be able to trade our full trading systems because it includes other indicators, but we want to make sure that you can at least join us using the zoning software by itself first and get your feet wet. Okay, so let me just do here. Which Ninja version do I need? Ninja 7, because Ninja 8 is not stable enough. Our development team has not developed our products for Ninja 8. The benefits to you guys is that if you do decide to purchase, we don't charge for updates. So when we develop anything for Ninja 8, you will get it absolutely free. Okay. Abe is asking, after purchasing, do we need to subscribe to Ninja? No, if you're just using Ninja, you can use it for free in a simulated account for life. You can use our software in a sim version of Ninja at no charge to you. If you own our software, you can use Ninja for free. The only time you'd have to pay for Ninja is if you had a live license and you want to place live trades in your real live money account. What does the mastery cost then? Just go to our website on the mastery program. That's a different discussion on its own. If you have questions on that, let me know, and we'd be more than happy to go over that at a different time. I encourage maybe a phone call or you want to speak to some of our traders. Ed is asking, you can't see it. Ed, maybe if you just send an email to our support desk, you can ask for assistance on that. Does Ninja provide the data feed or is it extra? It's actually free. If you're using other platforms, Thinkorswim or TradeStation, you can actually get a free demo data, a demo feed of data. No, there's no way to work with Thinkorswim. Thinkorswim is not as advanced enough to run our code, and you can't protect your intellectual property properly through their platform. So there's no way we're going to give our advanced algos for that platform. Not that it's not a great platform, it's just that it's doesn't meet our standards. Okay. And let me see here. Do you place live trades and how you became a master? Yes, you do. We do place live trades in the room. You will see us trade live when the trade meets criteria. You will see all that. Yes, you do need to shut down Ninja. RJ's answered that. Dawn, did you just purchase today, Dawn? If you did just purchase today, we'd be more than happy to rebate that. That's not a problem. Yeah. We're very thorough. We're very open like that. Yeah, we're not shysters here. Got a lot of traders, and we've got thousands of traders across the globe. Carol, yeah, you can watch me trade in the live markets. The only issue is that you might not see me trade the time frames of the markets that you like to trade on. So, you know, just bear in mind that if I do trade in the trade room, it's based off the time frames and stuff that we do trade. Okay. So can we do this on Ninja later evening after the market test? Yeah, absolutely. Yeah, you can download Ninja at any time and download the free trial. Yeah. Don, just send me an email and I'd be more than happy to extend that back to you. Not a problem, Don. Yeah, be more than happy to do that for you. Just send us an email. We'll touch base and we'll square that away for you. Okay. Is the manual short enough that we will have time to actually sim trade with your software? Yeah, the manual is just to give you a breakdown. It's very visual. I mean, it should maybe take you half an hour to go through the manual and just read all the different features and the settings. No, it does not work with TD Waterhouse. As I said, Thinkorswim is not stable and it's not advanced enough to run our type of algorithms and our code. Okay, so I encourage you to download Ninja. It's free, and you can use our software on that. Okay, so once again, guys, I want to thank you guys for having me. I want to thank you guys for you know, sticking out. My hat goes off to all of you guys who stuck around for the trade room. I've got a question here. Dan is asking, can you please go over the coupon process? Not a problem. Be more than happy to go over that one last time here. So let me just go over this slide for a second. We will give you a free trial of the download. RJ, can you let me just give you the link here for a second. Give me 1 second. I'm going to pull the landing page link in here, and if you don't mind, Dan, I'll just take a few extra minutes to do so. Okay. Copy link location. I'm going to put the landing page link in here again. Okay, this is the landing page link for the free trial. Okay, and this is the free trial access. So you have to have this link. So it is in the chat box currently right now. Does everybody see it? Excellent. Everybody sees it. All you need to do is fill out your first name, last name, email, phone number, hit download now. That download now button is going to bring you to our free trial installer page. And it's going to say SD Volume Zones free trial. Okay? Just follow the steps for installation. If you don't have NinjaTrader, if you currently do not have NinjaTrader, okay, just go to ninjatrader.com. Download NinjaTrader for free, get their free data, and then go back and run our installer. I cannot see the link for the free trial, Nick. It's in the chat box, Nick. Do you not have access to the chat box? If you do not see the chat box and you cannot get the link, please just go to our website, goldenzonetrading.com, go to contact and send us an email. We will send you the link for that. Okay? And I'm giving RJ the link for that now. This is the link for the free trial so that anybody that needs that can get that. Okay? Now, once you download the free trial, you have access to this up until Saturday. And you will have 1 day with us in the live trade room tomorrow because our trade room runs Tuesday through till Thursday. We do not trade in the room on Fridays. I need time to trade on my own. I am a trader, guys, and I like to trade outside of education, and we also work with development. So you will not need to provide machine IDs for this. No, you do not, because we are giving you free access. If you purchase, you will need to provide us machine IDs. Yep, very seamless, guys. Very easy for you guys to access this. Okay. If you're not PC savvy, will tech support help us? Absolutely. This is why I love working with RJ. He's my main man. He's my senior support specialist, and he's probably the best in the business. He's the most friendly guy you'll ever meet, and he's the most savvy guy on computers you'll ever meet. He will log on your computer, help you if you need assistance. Yes, he will. The only thing we ask is that you bear in mind we work with a lot of traders, and if you send us an email to do an installation or you need assistance, please allow us time to respond to schedule that time. Okay? That's all we ask. We ask a little bit of lenience on that, but we will help you. Yep. Okay? So you have 3-day trial till Saturday. And if you want to take advantage of the discount, you have until midnight on January 9th, this Saturday. And you need to purchase, you need to use this coupon code on our shopping cart on our website. Okay? And the website, it's very simple, because if you go to our website, goldenzonetrading.com, all you need to do is go to the software tab, go to SD volume zones, okay, and then just go down to the buy now page. I can give you the link for this if you'd like inside the chat box now so you guys have it. I'm just going to give you the other link. This is our SD volume zone software page. So you can go back and you can watch other videos and you can take a look at that. And then when you go to purchase before Saturday, okay, just make sure that you enter the coupon code that's on the screen right here. Does everybody see the link that I just posted in the chat box? That's the software page for the zoning software. There's other videos. You can obviously go to our website and watch the videos on this. But the best part about it is I encourage you to come to our trade room in the morning and just watch me talk about the markets. Watch me break down the equity indexes. I'm going to trade the crude oil markets, treasuries, and you know, all of that other good stuff. We'll look at gold and stuff. We don't trade stocks in the trade room. We don't trade Forex, but we do trade futures. But if you are trading Forex, you are trading stocks, it's the same concept, just different market. Okay, guys? So I think that kind of wraps it up. Dan, is there anything else? The room is 9 a.m. Eastern. How do you enter your trading room? Let me just show you one last time. You go to our website, our homepage. The full training for our mastery program is a completely different perspective. The only concept there is that you'll be able to see what we do in the trade room. So if that's of interest to you, most of our traders don't need it because it's very simple to trade the zones by itself. Okay. Okay. So just go to the main site, log in, join us. You'll be sent to an automatic thank you page with a link to access our trade room. Okay. 9 a.m. Eastern to usually noon, 11:30 to noon. We usually trade the morning session for the U.S. market. Okay, guys? So I want to thank Dan and the team over at Winvesting for MarketFest putting on this great event. Most importantly, I want to thank the traders for sticking it out. We had a pretty good attendance, and you know, hopefully I was able to teach you guys something, and I was able to demonstrate some really valuable content. Did you guys enjoy the presentation? Did you guys get a lot out of it? Hopefully I broke that down in a way that makes it simpler to understand. And I encourage you guys to get in touch with us. Thank you guys over there for hosting the event, having us in, and you know, look forward to trading with you ongoing. And enjoy the evening with your friends and family, guys. Take a break from the screens, and then rebalance for tomorrow is trading. If you need assistance with any of the installation or anything like that, just send us an email. Just go to our Contact Us page. You're going to basically see that we've got our information here. The best way to reach us is by email, because all of our support representatives get that, including myself, so that we can essentially respond and help you as best as possible. Okay, guys. So I think that's it, Dan. I want to thank you guys, and I'm going to shut down here and take some water. Take care, guys.